Welcome back to QAV Australia. Tony Kynaston, episode 846. It's the 18th of November, 2025. How you doing, TK?
Very well, thank you. How are you?
Dude, I'm good, but last week, man, I don't know, something's going on. I'll see how I go at Kung Fu tonight, but last week I'd get on the mat and 5 minutes into the cardio and I'd be like wrecked, dragging my ass around for the next hour or two or three. Don't know what was going on. Anyway, hopefully it was just a bug of some sort. But yeah, you just have those days, or
Yeah.
it was a few days when I was just like, oh my God, what's wrong with me? Like normally I'm, king of the hill. Last week I was just had to walk off and sit on the side and
Ooh.
yeah, thought I was going to pass out. Don't know what was wrong with me. For the record, got a nice email from one of our long-time subscribers, Andy, this morning. So congratulations on your black belt. Not a black belt. Just want to put that. I don't know how that got out there yet. My next grading is the black. Our next grading, Chris and mine, is the black belt. We're not black belts yet. We just had a black eye. That's not a black belt. You shouldn't confuse the two. A few black eyes on the way to the black belt, but yeah.
So what happens when you both get black belts around your place? Is it just like, what was that Brad Pitt and Angelina Jolie movie? Mr. and Mrs.
Mr.
Smith?
Mrs. Smith. Yeah.
Is it like that? Here, I'll cut the
Well,
vegetables.
yeah.
That's okay,
Yeah.
darling. I got it.
Yeah. No, we're both just sort of trying to keep ahead of Fox
Right.
because his goal is to have a black belt by the time he's 16, another 4 to 5 years. So
It's every boy's dream to take on their father, isn't it? Kill the king.
yeah,
Kill the king.
he's already trying to do it. So yeah. Hey, speaking of long-term discipline, man, QAV Light absolutely killing it. I did a light update yesterday and I said, fortune favors the patient and the disciplined, not fortune favors the bold, as I used to quote Napoleon, but I think it was a Roman poet, Terence, who first said that. Fortis fortuna adjuvat in his play Formia. Because the QAV Light portfolios are killing it at the moment, Tony. Let me just bring up.
I thought it was fortune favours the brave, which is the British SAS motto.
Yeah, well, they just borrowed that off Napoleon.
Uh,
I don't know. The QAV Light group, all time, so that's the four portfolios all bundled together, as of right now today, up 19.999% per annum versus the SPDR 200 up 10.10%. So double market for the Light group portfolios all time. And this calendar year, up 32.83% versus the SPDR up 8.5%.
That'll help.
It will help. And as well, I'm sure all of our listeners know, the Light portfolios were just in the dogs up until the middle of this year, honestly. Well, no, they were in the dogs a couple of years ago. By the middle of this year, they'd caught up. And I've heard you say this so many times over the years. And
yet you always act surprised when it happens.
No, it just takes 6 months.
Right.
And I said to our subscribers, look, I know we'll have tough times. The market's going to have a correction. It's already having a correction. We'll talk to about it in a minute, according to some people. But, if I look at the dummy portfolio, once we got that lead after COVID, even though it's come down, it's sort of maintained a healthy margin between the index. Like it lost a little bit coming out of, that into that 2022 period, but it's still maintained a good lead. If I look at the individual portfolios, which I haven't done yet, so this could be a big shock. The 221 portfolio, that was the first one that I started at the beginning of 2022. That at one point in middle of 2023 was down 10% versus the SPDR, which was up 5%. So it was underperforming by 15%. It's ahead now, but just. It's 9.17 versus 8.94. So it's just caught up after whatever that is, years. The second portfolio that I started a few months later, it is now 18% versus 8. Well, since it started, 8 per annum, this is. The third portfolio is 21% per annum versus 10.8 for the SPDR. And the last one is 22.4% per annum versus 10.41. So the first one is caught up. The other three are killing it. Double market for the other three, and somehow it pulls the whole lot up. So I'm so happy about that because not that I was really concerned that I was doing something wrong, but, it was concerning that it was just looked so bad for the first couple of years. But there you go. It's now demonstrating that, the system just works. If you just stay disciplined, stay focused, even a dummy like me can do it. And even with that's, 4 portfolios, like not one of 10 to 20 stocks, but there's, I don't know, 60 to 80 stocks in that, I don't know, they're all got 20, but there's 60 to 80 stocks in there probably. While I'm at it, let's look at the dummy portfolio.
Well, I think we should get T-shirts made up with Fortuna Patienti Favet on them.
Oh, okay. All right.
Fortune favors the patient.
Do you remember the one with Latin on it that I had that I wore on our last Europe trip?
Was that the, yes, I do. The one, Vicinado, something like that. No, Dispatio?
No, I'm not going to say what it was because it was disgusting.
Oh,
it was in Latin.
That one. Oh, I thought you meant.
Yeah.
I know the one you mean. Yeah.
Yeah.
It was disgusting, but it was in Latin.
It was it was in Latin. And I was waiting for someone in Italy to sort of recognize it and call me out on it. No one did.
But you had one with something being blown up, didn't you? From I think it was the Caesar podcast. Vesparchio or... Anyway.
I
digress.
Are you talking about when they burn thing? Go Vestario. No,
yeah.
Vestatio. No, I don't think I had a Vestatio one. The dummy portfolio has been running. Oh, hold on. That's not the right end date. God damn it. Let me get to the right end date. So 2nd of September 2019 to, what is the date today? The 18th. I'll do it to the 17th. 17.24% per annum versus 8.2% per annum. So better than double market over that period just. So, very happy about that. Current calendar year for the dummy portfolio, by the way, up 27% versus 8.5% for the index. So best stock in the dummy portfolio this current calendar year, PRN up 97%, SRG up 95%, PPM up 60%, PLT up 55%, SRV up 53%. Just a bonkers, absolutely bonkers year.
It has been, hasn't it? Maybe we're getting ahead of ourselves and going the early crow here because the market is turning down a bit. But we'll see.
Well,
it's allowed to
this
pull
is
back.
the time.
Yeah.
This is the time.
Oh, to crow.
To crow. We may not be able to do it in a month. Yeah. So the Financial Review I was reading this morning says that there's a correction. This is Chanticleer. The ASX 200 has fallen for 6 days straight and is off more than 5% in less than a month. Indeed, the case that a pullback may actually be healthy is further strengthened when we look at what's driven the market over the past 6 months. To put it bluntly, it's been a dash for trash.
And that's not how we've overachieved. That's what the market's doing.
Yes. This is, he's quoting some Macquarie Bank guy here, but Macquarie's local strategist Matthew Brooks argues we are in a style bizarro world where the stocks that usually do well are struggling and the losers are winning. I'm like, really? Because our stocks are doing great. I don't. And they're not losers.
And the only bizarro thing about them is that people haven't heard of them. People don't buy
and
them.
That the only bizarro thing is that you think it's bizarro because they're good stocks. The best performed style of the past 6 months is actually loss-making companies, according to this guy. Loser loss makers, defined by Macquarie's quant team as companies with higher risk and weaker initial momentum, delivered a staggering return of 41.7% over the period, while companies posting negative numbers at the net profit and cash flow line up 26.1% on average. So let me see, last 6 months.
And of course, we've seen this before too, haven't we? Must have been 4 years ago, 3-4 years ago. I think I even did a couple of shows about inverting QAV and seeing if that would work better than QAV.
Yeah,
and
you did.
It did for a while, and then it came crashing down because when the market turns, those stocks go up the escalator and down the mine shaft, down the elevator shaft.
By comparison, our last 6 months in the dummy portfolio is up 26% versus 6.4 for the benchmark. So he's saying those posting negative numbers at the net profit and cash flow line up 26%. Well, guaranteed that none of the QAV stocks fit that description, and they've done 26% too.
They don't even get through our first filter, do they? We don't even download them.
Should reach out to Chanticleer and say, hey.
Yeah, if anyone has a contact into the AFR, let us know. We're happy to talk about QAV.
The other article that I saw, I'm not sure if I sent you this one, investors can forget Trump's tariff war, but beware his next move.
What, the release of the Epstein files? Or, as they're also known, the Epstein redactions.
Yeah. Well, there are no Epstein files. They told us a few months ago, don't exist. It's all a big Democrat hoax. Now they're going to release them, and he's told Pam Bondi to particularly look into the Democrats, because when the Democrats created the hoax, they made it all about the Democrats who were involved with Epstein. I don't know. Sure, Trump sees a logical through line there somewhere. Having insisted for months that tariffs would not increase prices, the Trump administration has begun slashing agricultural tariffs to try to reduce what Americans are paying for groceries. On Thursday night, Trump said many food products from Argentina, Ecuador, Guatemala, and El Salvador would be exempted from levies after they agreed to trade frameworks with the US. A day later, he moved to lower tariffs on beef, coffee, and dozens of agricultural and food goods, including from countries that haven't done a trade deal. That includes tariffs on good old Australian beef. The two real hotspots have become the prices for beef, which sits at record highs in America, and coffee, which has surged more than 41% in the past 12 months, mainly due to the 50% tariff Trump imposed on Brazil.
But he's got the price of eggs down.
Oh, he has?
Yeah. I heard him interviewed about this. I think it was actually on Fox.
Didn't we talk about that on a US podcast a few weeks ago?
No, this was only in the last week.
Oh, right. But we did talk about eggs. We talked about a big egg company over there, remember?
Oh, we did
Can't remember who it was now.
Yeah.
And how the egg prices had gone up when there was bird flu and all of that kind of stuff, and then they came back down. But I think they're still higher than they have been historically. It's like $4 a carton or something over there.
Yeah, well, Trump's claiming he solved the egg problem, but of course that's not where the problem is now. It's in beef. And the American farmers are up in arms because they're being flooded with beef now because the tariffs are being lowered. They thought they were getting a good deal and being protected. Now they're not. So they're upset.
Well, the reason I mentioned the trough thing is because the guy from Macquarie, Matthew Brooks, also said that he thought that some of the slowdown in our market was because of the shutdown in the US and the tariffs and all of that kind of stuff. And now that the shutdown is over and the tariffs are being pulled back, that it might help our market recover. But
I doubt it. Because it's also, I think it's also part of what's holding us back is partly the shutdown, but not the way you first think of it as being the shutdown. It's because no one did any work on statistics over there because they weren't getting paid. And so all the key stats in the economy in the US are about a month behind. So people are just not prepared to invest until they see what payrolls are like, what CPI is like, whether the Fed's going to cut, whether the Fed's going to raise. We've seen this before. I mean, probably one of the hardest times to be an investor since we've been doing QAV was when the RBA started raising interest rates. And, a lot of the noise in Australia is we've seen the last cut. And so people are gun shy. And if the US is in the same situation, which some analysts are doing their own numbers and saying that the Fed may be on hold for longer than people think, then, we're going to see the end of easy money, and then all those companies which don't make a profit get sold off and the loans get repaid before the interest rates go up.
Well, the good thing from our perspective is it doesn't matter, right?
It doesn't matter. No, that's right.
Well, it does in a way. Like we lost half of our listeners when the when the interest rates went up. It was interesting watching people who were not able to. Well, I don't know why they disappeared, but at least nearly half of our membership, I think, disappeared in 22, 23 when the market was struggling. Don't know why. Maybe there was a variety of reasons, but I think a lot of people pulled their money out of the share market. I know I got emails from people saying they were buying a house or they were doing this or doing that. But people do get affected when the market has a correction.
Oh, absolutely. Or when interest rates go up, and they both are interlinked, I guess, for sure.
Connected, yeah.
Yeah. But as you say, I wish I could read all the economic data and predict the future, but it's not possible.
I was talking to somebody. Oh yeah, I had a guy over here, a friend from Kung Fu, the other day. We were talking about investing, and he was, asking, what you thought about, what was happening in the US and what was going to happen. And I said, Tony's thing is we don't try and forecast the future. Right? We just play it day by day. Let the system tell us what to do.
Correct. Yep. Play the cards as they're dealt.
Yeah. What you got on your list of things to talk about, TK? I got more, but I thought I'd throw to you for a bit.
I have quite a few because we did an interview last week and I've got a few stories backed up. I'll try and get through them quickly.
Tony's a little bit backed up, people. You need to have more fiber, Tony.
Try
chia seeds.
I'll try prunes,
yeah. Green smoothies with chia seeds is what I read. And psyllium husk.
Is that what
soluble and insoluble fiber.
Is that what you're drinking?
Yep.
Okay.
Yeah.
So you're backed up as well.
No, I've got lots of fiber. I know they get backed up. Running like smooth, I am.
Okay.
Anyway, moving right along.
I am not backed up. ANZ had their full year results. I own shares in ANZ. It's been on the buy list for a long time. The market actually responded okay to it. The shares have gone ex-dividend, so they've come off a little bit price-wise, but they'll pay a reasonable dividend yield. Usually takes a month or so to do that. For some reason, I can never understand why banks take a long time to pay dividends. I guess that's why they're profitable. Anyway, the company reported NPAT of $5.79 billion, which was down 14% year on year, but that was largely due to redundancy and legal costs. The new CEO, Mr. Matos, is shaking things up, but it's costing some money to do that. Underlying cash profit, though, was $6.9 billion, which was ahead of consensus. So it wasn't a bad result. I think people are giving Mr. Nuno Matos, the benefit of the doubt, and they like what he's doing, and they'll see what happens. It was pretty widely covered, that result, but it wasn't too bad. And ANZ has been the best performing of the bank stocks this year. The only one on the QAV list this year. And at the same time, CBA is off 20% as people start to realise that CBA was the most overvalued bank in the world in history. It's the analysis I read recently, so it's come off some 20%. People have asked questions about gold and use lines outside of the bullion shop as saying we're at the peak gold. And one of the people I respect in the mining industry analysis area is a guy called Tim Treadgold from Intelligent Investor. And a couple of weeks ago, he wrote about his visit to the UK conferences and trading hubs for world gold. If I can just summarize it quickly. He said a 10% fall in the gold price late last month rattled confidence in the market, but the underlying fundamentals point to a higher future price. And he's putting that down to, in the main, the BRIC economies continuing to de-dollarize central banks in the BRIC group. What he means by that is that they are trying to get out of US dollars and into gold as alternatives. And he points to the single issue which ignited BRIC demand for gold was the seizure in early 2022 of $300 billion in Russian foreign reserves by the US and the European Union in response to Russia's invasions of Ukraine. And at the time, that was described as the weaponization of the global monetary system by the US and Europe. And then the other countries, or the monoline countries, decided that wasn't a good thing, and they bought gold. But a few other things have happened, and he describes China as becoming a hub for the storage of gold. So where people store gold is important because they often transact in the same area. And China is emerging now to challenge places like London as the world's clearinghouse. So that's also seeing some investment in gold go on, and particularly by the Chinese, of course. And then he points to a report by the World Gold Council, which reports that demand grew by 3% over the last quarter, and 7% if you compare it to the half before. And he put it down to, well, this report puts it down to exchange-traded funds buying more than 222 tonnes and a further 300 tonnes in the current quarter. So ETFs are buying it. And the central bank buying also, so central banks around the world also buying up 220 tonnes, which was up 28% on the central banks buying in the June quarter. And the year-to-date buying of 634 tonnes was slightly lower than the previous, or the first 3 quarters of last year, so a little bit flat to down. So he's seeing this de-dollarisation theme, the buying of gold by ETFs and central banks as keeping the price going up. And he's also pointing to the traditional reasons that investors can buy gold. So he's saying it's outside of the monetary system, and he's also reporting that people are taking money out of the share market now because of the AI bubble. And he quotes Peter Atwater, a US academic, who says that with each passing day, the AI space looks more and more like home mortgage securitization at the peak of the housing bubble with its overlapping series of capital conveyor belts. So yeah, good article from Tim Trengold in The Intelligent Investor.
Tim Treadgold. Yeah, that's a good insight about the BRICS countries.
Yes.
I'm just making a note of that because they froze all the Russian assets, so they need to get something that can't be frozen.
Correct.
Or converted into something, yeah.
Yeah. Yeah, so on the gold theme, I have another article as well. I own shares in Perseus Mining, and this article was about their CEO who's retiring at 69. And he makes a point, and I thought it was really good. The quote is, after 12 years spent fielding questions about sovereign risk in African gold mining, Perseus departing chief executive Jess Quartermain has a fairly simple response. He points to the experience of rival Regis Resources. Regis acquired the McPhillamys Gold Project in 2012 and was close to approving a $1 billion development near Blayney, New South Wales last year, when the then Federal Environment Minister Tanya Plibersek indirectly halted the project by ruling that an important piece of infrastructure could not be built at the intended site because of Indigenous cultural heritage concerns. The dispute is now in the courts and the project is in limbo. For Quartermain, who oversaw a 69-fold increase in the value of Perseus, the contrast to his experience working in the supposedly risky jurisdiction of Ghana and Cote d'Ivoire is stark. So the article goes on to talk about it, but, incredibly successful CEO. Yeah, sure, he's riding a gold boom now, but he's been at the helm for a long time and delivered terrific shareholder returns by being an African miner. And because of that supposed sovereign risk discount, we're able to buy Perseus cheaper than we can buy miners that mine in Australia.
Saying that the sovereign risk in Australia is higher than the sovereign risk in African countries?
That's what he's saying.
The suggestion?
Yeah,
Wow.
definitely.
Reminds me of this book I'm reading by Dan Wong called Breakneck, sort of about the China and US rivalry. Um, I may have mentioned this to you on an earlier episode, I can't remember, but his basic premise is that China is run by engineers and America is run by lawyers.
Yeah, I told you that.
Did you?
Yeah, that was the quote a couple of weeks ago. Yeah, it
Okay.
wasn't from Breaknet. It was from an article I was reading.
Oh, okay.
Hmm.
It was probably about
Could
him
be, yeah.
or about
It's
his
called
book.
Review.
Yeah, it just
Yeah.
came out.
Yeah, I agree.
Yeah. And he's lawyers are there to stop everything from happening, and engineers are there to make stuff happen. So
Yeah, and
with
not just that.
positive and negative consequences too, of
Yeah,
course.
of course.
But yeah.
And not just that, but like, you know, a lot of the great breakthroughs in science came about because scientists shared their work until, people found it much more beneficial to themselves if they, were either hiring scientists to work for them and keeping them quiet, or registering patents and IP protection against any sort of breakthroughs.
Good point. Well, I got one. Michael Burry.
Yes.
From the Big Short film, or made famous by that, has shut down his fund, the Scion Asset Management, I think it was called. Its annualized returns are estimated to exceed 30% in its first years, driven by the epic against subprime mortgages and by very surgical bets. However, the last stage has been less brilliant. From 2021 to today, its most striking positions were massive bets against the S&P 500 and the Nasdaq, in addition to aggressive hedging through puts that, in a market dominated by liquidity and the technological narrative, have lost traction. So
It's kind of hard being Michael Burry and people like him if you're always taking on Wall Street or taking on the government or whatever. You're going to be right, sometimes, but you're waiting a long time between those events usually.
I know that we've talked about taking puts before and using it as a hedging strategy and using it as a, I don't know, whatever.
Insurance.
People have suggested it from time to time. Yeah, insurance. But this guy's like one of the professionals at doing it and has been getting it wrong for enough years now that he keeps expecting the market to turn around and it doesn't. Well, I think I read he had a whole bunch of Nvidia. He had a whole bunch of puts on Nvidia where he was going to sell them for $50, and they just keep going higher and higher. So yeah,
and that's the problem with that kind of any sort of option. I think is that you can be right, but you can be wrong on timing. That's the hard part. Yeah.
Yeah.
He may well be right. In a year's time, it wouldn't surprise me at all if Nvidia was $50. It's entirely possible. But the fact he's getting out says it's becoming painful to wait. Or he might just decide that it's more profitable just to exit the market and wait for it to crash. So who knows?
Yeah. But interesting indicator. I mean, I saw a lot of articles this week saying Buffett's out and Michael Burry's out.
Buffett's not. Hang on, Buffett's not out.
He's out.
He's
not.
Oh, he's
not
leaving.
Running it anymore.
Oh, leaving Berkshire Hathaway. Yeah, sorry, but they're still fully invested. Well, apart from their cash pile, they're fully invested in the market.
Yes.
Yeah.
But no more Buffett, no more Michael Burry for the time being. Anyway.
Well, I was going to read from his latest letter. Have you read
Warren's
latest?
No, I
letter?
haven't.
Oh, it came out.
No.
Came out during the week,
right.
And it's his. He starts off saying, well, it's supposed to be his last missive. He starts off saying, I will no longer be writing Berkshire's annual report or talking endlessly at the annual meeting. As the British would say, I'm going quiet, sort of. So it's a great thing to read if you haven't read it. It goes through a lot of his folksy anecdotes about him growing up and how everyone that he knew in Omaha went on to be successful pretty much, and how they were all part of a network and involved in Berkshire Hathaway in one way or the other, and went on to run Coke and all this kind of thing. So it's great to read. But he does make some salient points. But before I get there too, it's classic Buffett marketing when you sort of stand back and have a look at it. It's a note to the New York Stock Exchange saying that he's disposing of $1.4 billion in shares, and he's doing that to convert to B shares, which he's giving to his kids, who are putting them in their charities. So he's just disposing of his ownership progressively. Which is, if the chairman sells $1.4 billion of stock in an Australian company, all hell breaks loose, the shares are down 30%. He just slips it in, the first line, I'm selling shares. And then there's another 10 pages of folksy homespun, 1930s Omaha, down on the farm wisdom, just to hide all the fact that he's, just done something which would normally be seen as a negative. It's great marketing but it is full of good stuff too. He a couple of things that I pulled out as highlights. He said, this is him talking as a 95-year-old to younger people coming up. My advice: don't beat yourself up over past mistakes. Learn at least a little from them and move on. It is never too late to improve. Get the right heroes and copy them. You can start with Tom Murphy. He was the best. Choose your heroes. Choose your heroes very carefully and then emulate them. You will never be perfect, but you can always be better. I thought that was.
Is it Murph quote. That you got the prop calf of 7?
It is, I think, from memory. One of those. It was from that book anyway, where Murphy was featured. Yeah. So that was a good quote. He then goes on to say, remember Alfred Nobel, later of Nobel Prize fame, who reportedly read his own obituary that was mistakenly printed when his brother died and a newspaper got mixed up. He was horrified at what he read and realised he should change his behaviour. So don't count on a newsroom mix-up. Decide what you would like your obituary to say and live the life to deserve it. So I thought that was great.
It's I talk to my boys about that all the time. I don't think I'm getting through to them yet, but well, I remember reading. Do you ever read Stephen Covey's 7 Habits of Highly Successful People?
I haven't, no.
I read it when I was 20, maybe 19, 20, something like that. And he talked about imagining your funeral and imagining what people were saying about you at your funeral. Family members, your children, members of the community, your spouse, et cetera, et cetera, et cetera. Mm-hmm. What you would want them to say about you, and then figure out, okay, what kind of life do you need to live in order to have people say the things that you want them to say about you at your funeral? And there's your blueprint for how you need to live your life. And it had a huge impact on me when I read it at the time. It sort of gave me an idea, okay, well, this is the person that I want to become,
Right. Yeah, I don't know if I've ever gone to the extent of enunciating it, but all those kinds of reminders from Buffett along the years have certainly made me think about it a fair bit. And being a corporate CEO wasn't part of the mix.
Yeah. Well, he was a great corporate CEO.
Yeah, never saw his kid.
Yeah, right. Yeah. What do you want your kid to say? Well, never saw my dad. Made a lot of money. He's on the front cover of a lot of magazines, but we didn't spend. Yeah. You finished with the Buffett thing? You got more?
No, I'm finished. Thank you.
Karoon Energy, Tony. Leadership shifts to new CEO Carrie Lockhart. I think we've mentioned this was happening before. The CEO, Dr. Julian Fowles, has left, and they have confirmed the appointment of Carrie Lockhart as the new CEO, bringing 3 decades of industry experience, according to Yahoo Finance. Karoon is a company that has constantly been on our buy list. According to this article, the company's 1-year total shareholder return of 19.6% stands out as a sign that investors who stuck with Karoon have been rewarded, even as longer-term 3-year returns remain in the red. Not sure if we hold Karoon. Do you hold Karoon, Tony? A bit small for you, I think, wouldn't it?
I've owned it in the past, and I remember doing a pulled pork on it and reporting about it a couple of times too. Because it's been very choppy of late when they bought the Baúna gas fields, I think, or oil fields in the US.
Yeah, I'm just looking at my thing. I had to sell it in September. It was a Rule 1 sell in a couple of the portfolios, and we lost a lot of money on it, 19-20%. Thanks to your new Rule 1 of 20%.
Well, if interest rates go up, we'll start to put that one into effect, I think. We'll see how we go.
What do you mean? It's already in effect.
Sorry,
You put it into effect.
We use it a bit more.
Oh, well, you use it a lot. Yeah. Yeah, we got out of it we bought in at around about $2 in June of this year and then sold it in September at about $1.60. It's at $1.66 now. So because it boomed, jumped back up recently. So we would have, if we'd held on until today, we would have lost a little bit less on it, but it certainly is nowhere near where it was when we bought it in June.
Yeah, and if you can deploy it into a portfolio that's earning 30% per annum this year, it's better off.
Yeah.
Money's better off going
that's right.
somewhere else. Yeah.
Yeah, our portfolios have done okay despite selling Karoon. But anyway,
maybe because of selling Karoon.
Yes. Good luck to Carrie Lockhart. I had one more thing. MTO trading halt. Motorcycle Holdings. You've talked about them a few times.
Yep.
Requested an immediate trading halt in its ordinary shares. The company has identified an historical underpayment of vehicle registration duty in each state and the territory in which it conducts business. The company requires additional time to progress its internal review to quantify the extent of the underpayments and the potential implications and prepare an announcement to the market. The company requests that the trading halt remain in place until blah, 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 blah. Now, this was on the 11th of September.
They have come out with an announcement since then.
And what did they say?
Share price has gone up. Well, they've quantified. They said that their systems had made a mistake because apparently in that particular business, they self-report their own tariffs and then pay them. They effectively become an agent of the state governments and collect and pay their own tariffs, but an audit of the process means over the last 10 years, I think they said it could be between $2.5 and $3.5 million that they need to make a catch-up payment for. And they said it was fairly complicated because the tariffs that they have to pay were on parts that were then going into motorbikes and sometimes, fully put together motorbikes, but must be fairly complex tracking tariffs on accessories and things like that. Anyway, they've got systems in place now to track it. They're dealing with each state to make a payment. They have said that they may be charged interest and they have said they may be charged fines, but they think by self-reporting, it will mitigate a lot of those fines. So they've said between 2.5 and 3.5. I wasn't quite able to tell whether that was the base and then you add on the interest and then you add on the fines, but they said that they were confident they would pay it out of cash flow if they were levied.
Well, we hold it in one of the Light portfolios. I've held it since December 2024, almost a year, and it's up about 100% since we bought
done
it.
Well, hasn't it?
It has. I'm wondering though if this is a governance red flag. Did we look at something like this and go, "Oh, these people don't know what they're doing"?
No, I think it's the reverse. Their systems now pick it up and they self-reported. So I think it's good governance. I don't mind if someone makes a mistake. I just want to be told about it, and they've done that. So that's good governance, I think. And they're going to fess up to the states and work with them and pay their fines and whatnot. So, yeah, no, it's good governance.
Good governance. Okay. You screwed up, but you admitted it and fixed it.
Yeah.
Yeah. Okay. So we won't have to sell MTO. That's good.
No, it's doing well.
What else you got?
Getting close to a pulled pork. I probably should have said this at the start when you were talking about stocks that have done well. But I was going through looking at the buy list recently, and there's 3 stocks I wish I'd been in a position to buy myself, even though I'm doing very well this year as well. But have you seen the share price graphs for EDU, Pepper Money? So EDU is Education Holdings, I think. Pepper Money and McMahon, MAH. If you want to have
what was the third one?
MAH, EDU, PPM, MAH. Have a look at those graphs. They're pretty good.
Oh.
So good luck to anybody out there who bought them.
So let me look at EDU first. Oh, yeah. Well, we hold EDU in one of the Light portfolios. I've held it only since September, but it's up 18% since then. PPM.
Pepper Money, yep. And they
Got the
recently
money.
bought the Rams portfolio of mortgages from Westpac.
We held that in the dummy portfolio and one of the light portfolios. Held it since the 5th of May in both portfolios. It's up 40%. And who was the last one? MAH.
MAH, yeah, McMahon.
McMahon.
Mm-hmm.
I hold that in a light portfolio too since 2 weeks ago. And it's up 12%. That's not bad in 2 weeks.
It's good. And that's the tip of the iceberg because it's been going up a lot this year.
Right.
Anyway.
Yeah.
So it's some good news there.
It's down 4% today, McMahon, but I think the market's just down today.
Yes, a bit of a sea of red, the market today.
Commodity, let me do a quick commodity status update. I did my updates yesterday and everything's really good. Tin, it became a buy. This is the major thing that was different from the previous week. Iron ore still a Josephine, gold is a buy, coal thermal is a buy, coal coking is a Josephine, crude oil is a sell still. Copper and platinum are Josephines, aluminium's a buy, zinc's a buy, steel's a Josephine, LNG is a buy. Wheat is a Josephine, the rest are sort of minor things, don't care. But yeah, so a lot of buys, a couple of Josephines in there, but the crude oil one is the one that I'm still surprised about. It's still going south. And I don't understand why, but I keep expecting it to turn around, but it's been going south for quite a long time now.
Yeah, it doesn't tend to turn around in the summer half in the northern hemisphere. They use less oil. They're not heating things using oil. So it could still go up, but generally is a bit weaker in the summer months.
Are we almost in the winter months?
Oh, sorry. Yeah, it should be going up. You're right. We're in summer in Australia, aren't we? Yeah.
Yeah.
I tell you what's
forgetting where you live now, Tony?
I'm looking out the window and it's like winter here still. We're 5 weeks away from Christmas and it's 12 degrees down here.
Yeah, well, it's 32 degrees in my office, Tony, so come up here and sweat through your undies like I am. Okay.
That's that green shake you're having.
What else you got? Yeah.
Pulled pork.
Pulled pork.
Pulled pork, yes. On a company called Symal Group, SYL.
SYL.
Yeah. I noticed them new on the buy list this week. And I did notice, so I picked them out yesterday. And I did notice today they're right on the cusp of the bottom of the buy list now. So people, if they want to have a look at it, get in quick. But yeah, it's not a recommendation. Just do your own research. Do you know what Symal means, Cam?
Oh, I know what.
SYMAL.
No, I know what they do, but because when they first turned up on the buy list a week or two ago, I was like, never heard of these guys before. I had to double check it. You know, I have this thing now. Right. If anything weird turns up, I'm like, oh, hold on a second. But yeah, I know they're like a construction and infrastructure services company, but what does Symal stand for? I figured it was somebody's name.
I thought so too. I thought it was like Simon and Mal got together, but no, it's from the Latin word simul, meaning together, where we get simultaneous from. Yeah.
Right.
So they might actually pronounce it simul. It's spelled SYMAL. I'm not sure.
Right.
But you're right. They're focused on civil infrastructure engineering, contracting, plant and equipment hire, selling of quarry materials, recycling, remediation, et cetera, et cetera. So basically a civil engineering contractor with associated add-ons. I guess where they see they have a benefit is that they provide end-to-end civil construction solutions. And it certainly seems to have been working because they've grown quickly. But basically they see it as advantageous that they often go in, say, to a government piece of work and do all the preparatory work, build up the business case, do all the civil drawings, etc., get the costings right, and then tender for the work, and then do the work, and then maintain the work. So it's sort of cradle to the grave engineering and construction. They have all sorts of different projects. They're working on the Northeast Link Road in Melbourne. They're working on wind farms, renewable energy sites, airports. They're constructing data centers. For example, Next DC has a data center in Tullamarine, which this company is helping to build. They're based down the eastern seaboard and expanding into SA. 73% of their work is infrastructure, power, or renewables. 80% of their revenue from 2026 is already secure. Sorry, 80% of the revenue planned for 2026 is already secured. 60% is secured in 27 and 40% in 28. So plenty of work in the pipeline for them. Nearly 80% of revenue is engineering and construction. 20% is plant hire. And that includes the operating of some quarries and selling the materials. So mainly engineering and construction. Interesting story. So way back in 2001, famously, the managing director and major owner, Joe Bartolo, started with a shovel and a wheelbarrow and a ute and opened a landscaping business in the residential sector in Melbourne. And then it went from landscaping to concrete paving and then to structural concrete work for private clients and eventually larger residential builders. And then in 2005, the business became Conset, obviously still working in concrete projects, but getting bigger in the building and construction centre and also getting into engineering. In 2008, it became Civil X, and that became Symal. They call themselves a self-performing infrastructure business. So do you know what self-performing means, Cam?
I think my Catholic priest told me I'd go blind if I did that when I was young, Tony.
What was your Catholic priest's name?
I don't know, Father something. I obviously didn't pay much attention to anything that he said because I've been self-performing ever since. But some people say I do it for a living.
Well, I didn't know what it meant in the construction business sense, so I looked it up, and it means that they are a general contractor who use their own staff and in-house skills rather than subcontracting and hiring subcontractors for the tasks. So they're self-performing. Anyway, they continue to expand, often with acquisitions. So in 2018, they bought a company called Grampians Excavations, which was renamed Unite, again with a Y in the spelling. In 2019, they started a company called Wamara, and it's focused on Indigenous involvement in the construction industry. 2020, they eventually took all those aggregated businesses and put them under the heading of Symal Group. And they also acquired a company called Bridge and Civil in that year, which was a New South Wales bridge building company. 2021, they launched a company called Symal Contractors in Victoria. They also started a business called Sickle, again with a Y, S-Y-C-L-E, which was a recycling of manufacturing and construction waste business. 2024, on Thursday, 21st of November, so just in a few days' time, it will be their first anniversary. 21st of November, they took a significant step and they debuted on the ASX. In 2025, they bought another company called Zero, another one called Ascot Bin Hire, which is obviously hiring skips. And that's pretty much where they lay. I think they've got a couple of acquisitions on the go. They're growing organically as well with this cradle to grave engineering approach, picking up a fair bit of government work, some of it in defence as a new sort of market for them. But it's been a good year for them. They were ahead of their IPO forecasts and IPO prospectus. And net profit after tax was up 50% and revenue was up 15%. Pretty good results were delivered. When I checked the news for them, interestingly enough, yesterday, their chief financial officer resigned. So Mr. Jeff Trumbull tendered his resignation to pursue new professional opportunities with an ASX 50 organisation. Mr. David Gill, Symal's Group Manager for Group Finance, has been appointed as interim CFO while they conduct a search. And then there was the thanks passed on by the CEO. So not sure if that's a red flag. My initial thoughts were if the person's been poached by an ASX 50 organisation, that's not a bad thing. It's kind of franking the good work of the company. So I wasn't too bothered by it. I haven't seen what their share price is today, Cam. I don't know if you've looked it up at all.
Down 1%, $2.48.
Yeah, so it's about the price it was when I did the analysis. I'll go through some numbers. I did my analysis at $2.49. So the market's possibly absorbing the news of the CFO resigning, but if anyone's wanting to wait and see, I would quite understand to see what the market thinks of the CFO resigning, but it looks like it's been taken in its stride. So I'm using 249 for my QAV analysis. That's 100% of consensus target. It's above IV1 of 99 cents and above IV2 of 221. So we can't buy it as a value stock or at the valuations I'd like to buy it. And that's probably why it's at the bottom of the buy list. ADT for the stock is some $300,000, so it's a reasonable size. Yield is only 2.36%, so we can't score it for that. Stock Doctor Financial Health and Trend was a bit of a question mark in my mind. So financial health was satisfactory, which we score as being okay, but the trend was deteriorating. And when I went into it, it looked like there were just a couple of metrics which had gone down a little bit, but enough for them to drop the financial health from strong to satisfactory. So I dug into it. It looks like there was a little bit more added to their debt pile, which is not unusual when a company grows quickly. That may have driven the downgrade. It's all to do with the financial ratios in a couple of areas, that one of them being debt. But yeah, so I kind of stopped looking into it to see if I could form an opinion, because we score it as a -1 for health trend. We score it as a +1 for satisfactory health. So it's a bit of a wash. And I don't really need to form an opinion about whether Stock Doctor's got it right or not, because we just put the numbers in the scorecard and go from there. Stockopedia backed up Stock Doctor, though. Their quality rank was only 60. They have a high momentum rank of 92 and overall 83. So not quite the numbers we'd like to see out of Stockopedia as well. PropCap is 6 times, which is good, but again, getting close to our cutoff. If anyone's interested, high ROE business, which is not unusual in the engineering game because your biggest cost is people. But ROE is 23%, which is good. PE is just under 13, and we only have 2 halves as a listed business. So technically it scores as the lowest in the 2 halves, so we score it for that, but it may change as we get more halves rolling on as time goes by. Net equity per share is 72 cents, so we can't buy this for book value or book plus 30. And that is also about 20% higher than the NTA for this stock. So obviously those acquisitions have put goodwill on the balance sheet. Forecast earnings per share growth is 14%, and with a PE of 12, we're getting just over 1 as our growth over PE hurdle, so we can't score it for that. As I said before, there's a owner-founder, Joe Bartolo. He retains 31%, and there were 2 other directors who bought into the company, I think about 10 years ago or so. They bought 25% each along the way, and they still maintain 15.55% each. So 61% of the company, or 62%, is held by directors. So one of the reasons why the ADT is a little bit on the low side, because there's only about 30 or 33% free float in the business. It's a new 3-point trend up line, so you score it for that. Equity is increasing, but again, over a short time period, but we score it for that. So quality in our world is 10 out of 16 or 63%, which again is a little on the low side. And the QAV score is 0.10, which is at the very bottom of the buy list. So if the price keeps going up, it will certainly come off the buy list. But numbers are good. It's a growing business. It's still run by the owner-founder, and he's done a good job to get it this far over 20 years, starting with a pick and shovel. So it's well run. The risks for a business like this, well, obviously they have to find a new CFO. There are normal contractor risks. There's a risk of an economic downturn. There's a risk of being locked into unproductive contracts, and labour costs and labour shortages will hurt them. And there's always the sort of catastrophic risk of an industrial accident causing problems for them and their staff. But there are some advantages. The owner-founder I rate highly as an advantage. Gross rate to date has been managed well, and there's a very high percentage of work in hand which is locked in over the coming 2 years. So all of that bodes well for them. So that is Symal. I hadn't come across them before, but interesting company.
Interesting. I'm just looking up some more information on them. The group managing director, Joe Bartolo, looks quite young.
Yeah, he does, doesn't he?
Yeah. And is friends with Steve Sammartino, so I'm going to have to reach out to him. Jeff Trumbull, the outgoing CFO, has only been there 11 months. He looks like he joined towards the final steps of the IPO process.
Okay.
So, yeah, wasn't there a long time. But yeah, interesting. I asked GPT about the name and the branding of simultaneous, etc., etc. It says, if Symal's PR department is claiming a Latin root meaning simultaneous, they're doing the classic corporate etymology two-step. Take a real Latin word, shave it down, and hope no one checks a dictionary.
To be fair, their corporate website said that was based on the Latin for Symal.
Yeah, okay. Yeah. It says it's marketing Latin, not Latin. The Romans would look at Symal the way you look at those shampoo bottles that claim ancient Egyptian yoyoba rituals.
Right.
Yes. So there you go. Good stuff. Hey, I was just thinking, every time we do a pulled pork, I should just reach out to the managing director or the communications director or the investor relations director and say, yeah, we just did a deep dive on your company. Come on, or put it on your website.
Yeah, right.
You know.
Good thinking.
Australia's #1 investing podcaster, Tony Kynaston, said that you're doing a good job.
Yeah.
All right.
I'm sure they'll appreciate it.
I'm sure they will too. Thank you, TK.
Good idea.
After hours. Man.
Yes.
I finished Stalker. I think I told you about Stalker.
You did, yeah, it's on my list. Yeah.
We finally finished it. Took us like 3 weeks to finish it. Probably one of the greatest films I've ever seen. Got no idea what it's about. Got no idea what happens in it.
Mm-hmm.
But amazing. Highly recommended. And it's got the greatest, craziest story. After we finished it, I thought, it's one of those things I'm like, okay, I need to know everything about this now. Because every shot you could print and make a photo and put it up on the wall. Like every shot is just beautiful, atmospheric. But I found out this director, Tarkovsky, shot the whole film, spent like a year shooting it in this part of Estonia where there was like, they were shooting in old abandoned power factories and stuff that were all falling down, and there was toxic chemicals and radiation and stuff. Anyway, when they sent the film to a film lab and got it back, it was all unusable after shooting for a year.
Because of the radiation exposure?
No, because it was a new film stock. It was this Kodak film stock that was popular in the late 70s. Blade Runner, Star Wars, films like that was shot on it. But it was dodgy. So they got a dodgy batch of this Kodak film stock. And then the labs in the Soviet Union didn't know how to process it properly. So it was too dark and too green or something. So he went back to the producers and they decided to do it again. And he fired his camera operator or the second producer or something like that. They went and he fired his wife, who was the lead actress in it, and replaced her with someone else. They went back and they shot it again. No, the DP didn't like his wife or something.
And don't buy that film anymore.
Yeah. So they went back, they shot it again. This time he didn't like it, didn't like the performances in it. So he went back and did it a third time, shot the movie 3 times.
Wow.
And then everybody died because of the toxicity and the radiation poisoning. He died, his wife died, the lead, one of the stars, and there's only 3 actors in it, or 3 main actors, died. Bunch of the crew got sick and died because of the toxicity and the radiation and everything that they were around. And these things, like, it's incredibly tragic. He was like 52, Tarkovsky. when he died. I always wondered why he only made like a handful of films. It's because he died after making this film.
Wow. What a
Anyway,
story.
highly recommend it. It's a crazy story, an amazing film. But it's like a Lynch film. Just go along for the ride. You know, it's a big, deep philosophical thing on faith and modernity and blah, 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 blah. Apparently, I watched like 3 or 4 YouTube explanations of it afterwards, and no one could explain it. Everyone's like, well, apparently he said something. But he was one of these guys like Lynch who was like, no, everyone asked him to explain. He goes, no, you get your own meaning out of it, right? Just watch it. Shut up. You know. Anyway. That's good. What you got?
I will look it up. Well, Jenny, actually, first of all, Roddy and I watched The House of Guinness on Netflix. I don't know if you've seen that yet. And really enjoyed it. And then
the beer company?
Yeah. It's a series.
Oh, okay.
I think it's made by the people who made Peaky Blinders, so it's in that kind of style.
Right.
It's kind of like Succession from the 1800s.
Right. Sponsored by Guinness?
I don't know what involvement they have, but they must be involved somewhere. But it's really good fun. Really enjoyed it. And then I watched it with Roddy when he was down here and Jenny was away. And then she came back and I said, you got to watch this. And we watched it again with her. So, yeah. Wow. Thoroughly recommend it. Great soundtrack to it. Lots of Irish punk bands in the soundtrack. It's got that kind of Guy Ritchie feel to it.
Right.
Yeah. Modern music and period pieces. Yeah. So that was fun. We've named a horse Charlie 99, Steve Mabb and I, and Jan Rousseau, who's been on the show years ago.
Oh, yeah.
I own a racehorse, and we finally got Charlie 99 accepted as a name. So
nice.
Fingers crossed it actually does well, so we can. It's always a risk when you name a racehorse after someone that it just runs badly. But anyway, hopefully it'll run well. That was good fun. Speaking of horses, Lake Forest runs tomorrow at Caulfield on Wednesday, if anyone gets us in time. And then lastly, it's the Climb AGM in Sydney on Friday. So if anyone hears this and they're around at lunchtime, I'll be in the Climb head offices at the AGM.
Oh, you're going up for it?
Oh, yeah.
Wow.
I'm standing for I'm officially being elected director.
Oh.
I was appointed until they have the next AGM and then I'm facing an election. So
can I come down and ask you some hard questions, Steve Main type questions?
Or you can save it up till next Tuesday when you ask me questions anyway.
Can I invite my old girlfriend along?
No, I wouldn't do that. It's probably not safe for her, I don't think.
No. I could get her to feed me the questions. So she could have I'll have a little earpiece there. She can, well, have fun with that.
Thank you.
Are you watching Pluribus?
No. Is it any good?
Fantastic.
Oh, really?
Really good.
Okay.
Were you a Breaking Bad, Better Call Saul fan? I can't remember.
I've gotten halfway through them.
Okay.
I like them.
Maybe not for you then.
I like them, but they do. Anyway, I go hot and cold on Better Call Saul.
Right.
Yeah.
Oh, you may not like it then. And the chair company and the studio, and now we're watching Slow Horses. I got Chrissy to sit down and watch the first episode with me. I'd seen the first episode or two, but got her into it because I was talking to our Kung Fu Sifu the other day, and she said, I said, what are you watching? She goes, oh, we just finished the last season of Slow Horses. We love Slow Horses so much. So Chrissy goes, well, it's good enough for the Sifu, then it's good enough for me.
We've been watching Down Cemetery Road, which is by the same author.
The new one? Yeah.
That's good.
With Emma Thompson.
Yeah, who's fantastic.
And Rachel Griffiths, not Rachel Griffiths. No. Who's the other actress? Rachel something.
Yeah, don't know.
I know her from a few other things she's been in. Yeah. Okay, well, we got to go because we got to do an American show and you got a hard out. So let's go do that. Thank you, TK.
Thank you.
Let's have a good week.
Yeah. Happy ASX. Hope the market turns around.
Yes.